Good morning everybody, and this is your S&P 500 day trade setups for today. So we are waiting on the Feds, which is only going to happen tomorrow, and if you just look left you can see we have a fairly strong area of resistance here on the daily. One thing that does worry me on the daily is this hanging man that has formed. So daily break and close below this tail would almost put that into motion, and then I would start looking for opportunities to buy off structure lower down. So we'll get to the levels now. Oscillator's not giving us any indication at the moment, but if we start getting into the levels that we need to be watching, on the 8 hour, if you just look left, have a look at what's going on. You can see strong zone of resistance here, and we slap bang in the middle of it, and we are testing the upper end and down the bottom end of this zone. So nothing really to read into this. Could be strong move up, range, wait for the rates announcements and then move. So the forecast is for a 0.25 basis point cut. If they surprise us with, let's say, a 0.5% basis point cut, then you'll see a strong break through this area. If it's as expected, probably going to range a little bit more, looking for more noise or a catalyst to drive through. If they don't drop interest rates, then you're probably going to see us drop very quickly. So that's probably why we have the hanging man there. From the 3 hour perspective, nothing changes, and I think last week's levels I gave you pretty much played out. Very strong. This tail was a pretty strong level to buy off, and that was at 55.46. So definitely were opportunities last week to buy, and even an attempt to come all the way down to the gap. In actual fact, that gap play worked out beautifully. I'll explain it on the lower time frames because you're not going to see it here. Let's just get through the rest of the structure. So for today, you can see we've got a bit of diversions brewing, nothing crazy, but we're ranging. I don't see us breaking through this until tomorrow. So it's probably just a wise thing just to continue sitting on your hands, which is what I would have told you to do yesterday anyway, being a Monday and just before a big announcement. So let's rather look at the hindsight here. So when was this? The 11th. Which was pretty much last week. Okay. If you have a look here, you can see there is a daily gap. But often what happens is the last bit of structure before the gap, let's just drop down to the 15-minute. And it'll be, yeah, okay. So you can see here is the gap. But this bar here is often at 54.11. So the underside of the first bar of the gap is often the first point of call when you have a gap retest. So often it'll come back to here, or it'll pick up one of the tails to the left. It won't close the gap first because it's looking for an ambush. And what I mean by that is a lot of retail traders will be waiting right here at the gap. So if we just do this, so they're going to be waiting with their trade sitting here. Okay, now what they're looking to do is they're looking for these people to jump in very quickly. So in other words, just push the buy button. So they often bring it back to the first level of support, which is right here at 54.11. You can see beautiful little inside bar set up there after a move down. You're also going to have a whole lot of retail traders that are short, aiming for the gap. The minute they saw this structure here, you'll see this little tail with a big engulfing bar. Guaranteed there'll be thousands of people that were holding short here, waiting for this area. The smart money is going to ambush it because a lot of them will have trailing stops. There will be stops along here, so they know if they just start building a position here, it is going to trigger all the stops, which will then accelerate this to the upside. And that's pretty much how it played out, textbook stuff, and the gap stays open. You can see oscillators tightly moving together and a tight turn as well off some structure. That's why I always when you're looking to buy off a gap, always look for the closest bit of structure before the gap, and just scale in a small position there and put the rest of your position, at the gap itself, or even just watch the positions like I normally do. Don't climb in until I see there's an inside bar, so then I'll quickly add a position here with a stop. Stop will be just below the gap, because often it does go up and come and close the gap, but you often also get these V reversals. So that's kind of the beauty about that trade that was there. And after that, it was just off structure all the time. Anyway, for today, definitely don't think I want to be playing with this. We'll just wait for the Feds to finish their song and dance tomorrow. It's only going to be tomorrow evening, so that means Thursday's probably going to be the only level to trade. But if you do have time and you are sitting around, you could look at 56.11, and I'd actually even go all the way down to 5600, and then just keep aligning your levels. You see 55.80, 5600, 56.11, 5600. I've already said 5600, but I really don't see you breaking through the top here at 56.44 at the moment, but it could just extend to 56.50. So if you just zoom out to a higher time frame, you'll see there's a lot of structure just ahead of us. So you'll see it's quite a strong zone ahead of us. And then you also have the all-time high just above us as well. So I'm not interested in jumping in long there. We'll definitely wait for the Feds. And if there's if there's good news from the Feds, then there's a great opportunity to buy the break. Otherwise, I'm looking for structure lower down. And you can see the structure lower down, 55.80, and just below 55.80 is 55.46 or 55.50. So that would also be a fairly decent opportunity just to pull back onto structure just before the Feds announce their rate decision. Anyway, that's it for me. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.